Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, November 24th, 2:06 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Not a big show, kind of an abbreviated edition today. Not a lot went on today with the markets. Be sure and check out my interview of Richard Moglen. It's out on our YouTube page. If you're on our uh, email list, you also got mailed a link to it. A lot of positive reaction to that. Let's get into today's action. So, state of the market, we're in an uptrend as of the O'Neill follow through days on November 1st and 2nd. You can see the trend gauge over here, leaders with green arrow acting fine. Short term, all five of the major indexes trending above the 21-day exponential moving average. That's a green arrow. Also above the medium term 50-day moving average. That's a green arrow. Mixed bag versus the long term, still in effect. Small caps below the 200-day, mid caps above it, not making significant progress, but staying above it, and that's good. Big cap indexes, the Dow, the S&P, the NASDAQ, firmly above the 200-day moving average. So what happened today? Tame action to close this short holiday week. Mixed bag on the indexes, leaders just fine. Let's break it down here. The big seven lagged on the day, led NVIDIA still lagging since its earnings report. NVIDIA down 1.9%. On average, the big seven down 0.64%. Now for some good stuff, the RG8, this is our 8 growth ETF composite, up 0.53%. S&P 500 up 0.06%, but the equal cap weighted RSP, S&P 500 up 0.33%. So good breadth there. Same thing with the NASDAQ 100 down 0.14%, equal weighted NASDAQ 100 positive by almost 0.33%, Dow up 0.33%, mid caps up 0.4, Russell 2000 up 0.67. These are really, the mid and small caps are really the keys to breadth. That along with how is the average stock doing in the S&P 500. So breadth expanding, that continues to be good. Global diversified 60-40 stock and bond just barely negative on the day as bond prices pulled back as yields ticked higher. In-house GROTECTION, we were positive by approximately 0.10% today. Let's get into it. One of the title of today's video includes the term some pullback possibilities, and let's talk about that right out of the gate here. So here is the S&P 500, and let's take a look at this period here where we had a 46-day rally. Now I'm going to get alerts when the market's closed. What are you doing to me, Market Smith? So here's a 46-day rally above the 21-day moving average back in June and July. Very bullish part of the year for the indexes. We're rallying now, even stronger if you look at the slope of the line. But from an expectation standpoint, we know markets don't go straight up forever. But what can we look for here? Well, this is a snapshot of some of the statistics I keep relative to how long do we stay above the 21 and above the 8 EMA? How far do we get extended? What happens when we get extended? What happens when we test? And this reflects the first day back above the 21, back on 525. Coincidentally, it was two earnings reports ago for NVIDIA that kicked off this AI rally and really kicked off that rally over the summer. But we were 46 days rallying above the 21-day moving average until first close below it on August 2nd. During that time, we had rallies above the 8 EMA of 16 days. Then we floundered around it for about 4 days, went on another 7-day run, floundered around it for a couple of days, and then on a 15-day run above the 8 EMA before the rally paused. So you can see these areas pretty clear in here. It's this area, it's this area. And why am I bringing this up? Well, today was day 17 above the 8 EMA for the S&P 500. The slope of the line is flattening a bit. And one scenario I'm looking for next week, in fact, it's an expectation, is for price action to approach the 8-day exponential moving average. We closed today 1% above it. At the widest, we were 2.4% above it back on the 14th, and we've been in the ones ever since, closed 1% above it today. So one scenario, as I said, that I'm looking for next week is to maybe go sideways a little bit while the 8 catches up, kind of similar to what we saw here. Maybe at close for a day or two below, maybe just an intraday undercut and rally back above. And then with the bullish action that we're seeing, the breadth that we're seeing, we do have some resistance up here around 4,600, this prior high 4,607, but a touch of that 8 could be the trigger. It's not what I'm calling for. We don't do predictions here. We set out scenarios and probabilities and possibilities and take action accordingly. But I think the point of what I'm saying is after 17 days above the 8-day exponential moving average, would not be surprised to see a little bit of a pause. We're kind of due for one before resuming to the upside. It would be an expectation breaker for me if we did not resume to the upside, seeing the bullish action that we have in the market combined with the leadership and what's going on with the indexes. And one key to this will be the strength of small and mid caps going forward. So that's one of the scenarios that I kind of consider most likely now. Doesn't have to play out like that, but it's kept me from completely piling in to stocks here with the cash that we do have available. We moved some things around today. We'll talk about the trades that we made when we get to the tail of the tape and what our outlook is for that possible pullback should we get it. So don't want to do the tail of the tape yet. I want to finish going through these indexes. So let's see, there's the S&P 500. Let's go with the NASDAQ 100. And one thing that's I'm noticing here is when we had this, where's my drawing pen? There it is. When we had this consolidation back in April and May after a strong move up for NASDAQ 100 stocks. Actually, no, it's back here. It's February and March. It happened there also. Well, one thing that we noticed and something we're always keeping an eye on during corrections is what's the relative strength of the NASDAQ doing, because these are the big stocks that we want to keep an eye on, and they do kind of rule what's going to go on with the overall indexes. So when we saw this consolidation and we saw relative strength in the NASDAQ 100, it gave us a thought that that would probably be leading when we came out of this. But after we broke out, we had a mild pullback in the relative strength of the S&P 500 or of the NASDAQ 100. It pulled back while price was just going sideways. And we're seeing a very minor pullback right now in the NASDAQ 100 relative to the S&P 500. While the price is, we'll call it going sideways over the last 4 days since this breakout above here. So another possibility here is for a little bit of a minor break in the NASDAQ 100 stocks as leadership continues to expand out. Let's go to the Dow quickly now. Dow continues to work higher and showing relative strength this week. When the Dow shows relative strength after a period of relative weakness, it indicates that growth type tech stocks are taking a break because they're underrepresented in the Dow Jones Industrial Average. Mid caps trending higher above the 200-day moving average. Now we want to see the slope of this line. It is flattening out. We want to see it turn higher. And then finally, IWM, we want to see some strength broaden out into here. Still below this 180 area, still below the downtrending 200-day moving average. A break above there is what we really want to see. So that was one of the reasons why we did some offensive selling this week on Netflix. We also did some offensive selling today on Meta. Great chart, great action. Clear leader early when the rally started after its earnings report shook everybody out. But looking at the relative strength line, it's just going sideways for the last 2 weeks now. We're looking for the true leaders that are going to outperform the market by 3, 4, or five times. We don't want to have capital languishing in something that's just being in the equivalent of the S&P 500. Nothing wrong with Meta here, pulling back, touching the 80 EMA a couple times here. But these big stocks don't significantly outperform 2 times the S&P 500. Typically, they do at times. It depends on what's going on with the market. But in a strong growth bull market, these aren't the names we want to have all of our money focused into unless they have a big catalyst, such as Tesla with its multiple businesses, Cybertruck on the way, NVIDIA, which continues to crank out the chips. But then again, the reaction to NVIDIA is not what we had hoped for since we added to our position on its earnings day. These are not the right prints on this, by the way. It did not get above um, 500 today, so I'm not sure what's going on with that candle. But so this, very clearly can lead, as you can see here, with its gap up on its last earnings report, 2 earnings reports ago, and then its last earnings report, really, it just went sideways. When they go sideways, that's a setup for it to go higher. If they're outperforming, such as how it has here, going from 400 up to 500, then going sideways a little bit, that pause is a situation where a big stock like NVIDIA could really take off to the upside. That's why we added to the earnings report. We've got clear resistance here in this 500 area, and if it breaks through there and goes, we'll be ready for it. If it doesn't and it breaks below the 21-day moving average, we'll be trimming this additional position that we put on earnings and waiting for it to outperform again. So this is very similar with Netflix. We took our profit. It was 2 times the S&P 500, which was fine, but now it's all these days above the 8 EMA, near the top of its range. Same reason why we sold Amazon. Amazon relative weakness over the last 3 weeks near the top of this breakout level. We're getting some powder dry to putting into more leadership type stocks. Something like Duolingo, which has outperformed the S&P 5 times since our entry on this. Also, something like DraftKings, which is outperforming the S&P 500. Going sideways the last week, but this move up and continued relative strength after earnings report, we see this as a potential to be a good leader. There are some leaders that went without us. GoDaddy, we didn't get into this. Had an opportunity to, but didn't get it. There are some that look like they wanted to be leaders and reversed, like Palantir. After this downgrade 2 days ago, it's made lower lows, but it's right at the 21-day moving average now. So as I have mentioned, we ideally in a strong rally want to have 6 to 8 positions of a size 6 to 8%, and then the other half in sector ETFs or index leveraged ETFs to outperform the S&P 500 on it 2 times the S&P 500. This is why we don't put our money into anything that's going to be slow moving and underperform the S&P, because what's the point in taking the stock risk if you're not going to be rewarded for it? So that's kind of what we're looking at from a portfolio management standpoint. So I went through the major indexes. Let's just hit the rest of the inter-asset correlation here. VIX, lower lows, in sync with the market, making higher highs. This is below the 15, which is good. Really getting extended to the downside though. So again, wouldn't surprise me to see a spike up to this 15 level that corresponds with the pullback in the indexes to the at least the 8 EMA. Let's go to the dollar. The dollar was weak today, down 0.72%. How did that translate to gold and silver stocks? Gold up 0.5%. Silver up 2.7%, and we bought Nugget today, which is a 2 times gold stocks, as it's in this tight consolidation. A lot of the stocks look good volume patterns. I get it's below the 200-day moving average, but some of the leading stocks in this ETF are setting up very nicely, and Nugget has the beta that we want to do the 2 times outperformance when it starts moving. An example of that was back here. And if we get it, we get it. If we don't, we don't. Best trades will work right away. We'll look for that to start working, and if it doesn't, we'll punt. Next up is Bitcoin. Bitcoin continuing to act well. Poked its head out to a new high before pulling back into the session, but still closing positive on the day. Cleared this 18 level, pulled back, tested it, now cleared 19, pull back to the 19 level again. Not necessarily showing relative strength, but we're also looking at some of the Bitcoin complex stocks such as Coinbase, COIN, which really stood out today. I'll show that ticker here. Coinbase clearing the top of this cup base. This needs a little bit of a handle, relative strength confirming the strength. On to bonds. BND. Bonds pulled back in price, meaning yields up a bit today. BND down 0.75%. Let's see, TLT, the long bond, down 1.18%. That means the 30-year TYX up 1.2% on the yield, and TNX, the 10-year, up 1.2% on the day also. If yields are going to spike, that could also lead to at least a pause or a pullback in the major indexes also. I'm not sure what all these alerts are filing off for because the market's closed, so some sort of bug is going on with MarketSmith here. So let's get to a couple of stocks. Let's go through the portfolio. Tail of the tape, getting out of order here. So you can pause this. I'll hit the highlights. Bullish sentiment rising, but not quite at an extreme. Fear and greed's at a 68. It's not until you get into the 90s and then reverse that you look for some sort of a top. AAII, bulls spiked up a little bit. Bears down by 5. NAAIM up to 78. If this gets over 100, a pullback is somewhat imminent. Bullish sentiment. So here, 17 days above the ADMA. That's what prompted my discussion about the pullback. The 21-day can go a lot longer, as we've seen that. Here's the portfolio. What did we do today? I talked about how we sold Meta. That was a nice gain, up 1.8% times what the S&P did while we held it. Trimmed QLD. Again, this is looking at those big NASDAQ stocks not necessarily outperforming. We can find better use for that capital. Bought NVO, bought Nail, and bought Nugget. We had talked as we were trimming our Lilly position to put some of that into NVO. So we own both of the big names, and this had a nice day today with a breakout out of this flat base. Nugget, that's GDX, and Nail is ITB, 2 times the ITB. And you can see how tight this action is. Up, tight, looking for the next up leg in this. That may be tied to what rates are doing now. But again, if it doesn't work out, we'll be quick to get out of the way and wait for more clearer signals. We'll hit the portfolio real quick here. So I showed DUOL, that's outperforming. DDOG is another one outperforming the S&P 500 significantly. Tesla were in. That had a better day early, faded a little bit, but haven't added to our pilot position in this. But we know Tesla has significant periods where it can do well above what the S&P 500 is doing. It's set up to do it now. It just hasn't done it yet. CCJ, this continues to act well. Trending above the ADMA. This breaks the 8, we will cut the position. We're getting about 1.5 times the return of the S&P during this holding period. On this, CrowdStrike over 2%, over 2 times the S&P as it continues to trend higher. Microsoft is the next one that we may be looking to trim. And the thing is, with taking these profits in these, if the big seven start to accumulate, you can see the outperformance here before it's starting to go sideways. If the big seven start to outperform again, we'll put that into TQQQ or QLD, add back to QLD, if that's what it looks like the setup is. But we've done a lot of studies on these. Here's a long hold in Microsoft. We just don't want to have capital tied up in something that's not outproducing the S&P 500, or you might as well just have your money in the S&P 500. So these go through periods of sideways consolidation. We don't want to sit through those long periods. Frankly, as we said, we want to do things that are going to do 2 times the S&P, and that's one of the tenets of our portfolio management system. AMD outperforming NVIDIA, but again, riding the ADMA higher, not failed, but pausing at this breakout of this little handle here. Great reaction since its earnings report. There's the move up, outperformance there sideways. Here's a period of underperformance. So we're going to catch these periods of underperformance. If you're trending higher on the ADMA, you're probably doing at least 2 times the S&P. It depends what the ATR of the individual name is, but that's what we're looking for. So net to the portfolio, we've got about 25% cash available. We got our adjusted beta at 1.8. That's 1.82 times the S&P 500. Tame action to close the week. Mid and small caps outperform. QQQ and the big seven lag. We'll see what next week brings us. And with that, I'm going to go ahead and wrap up today's video. As always, love to hear from you. Emails don@revereasset.com. If you're interested in becoming a client, my partner is Dan Stewart, Dan